The trade war between USA and China has become a major source of risk for global growth. The most recent tweet from Trump shows that he is not increasing existing tariffs on Chinese imports, and this seems like a temporary ceasefire between the two countries. The trade war is also a major source of uncertainty for investors, and this underscores the importance of valuations. Because if the global economy goes backwards, prices will have further to fall if valuations are high. So let's get a current snapshot on valuations for the Australian share market. In the top half of this chart, I'm showing the price of the Australian share market in the heavy blue line and the level of earnings in green. This chart goes back to 2004 until today. We can see that prices are at near records, and this has been great news for returns in our own portfolios. It also shows that earnings have been trending higher, but earnings haven't gone up as much as prices. The result of this is that valuations are approaching record levels over the past 15 years. And this is shown by the valuation line in the black at the bottom half of this chart. In isolation, this high valuation backdrop would make investors nervous about future returns. The key here is that interest rates are also at record lows, and this is shown by the pink line in this chart. With interest rates continuing to decline, investors become less willing to hold cash and are putting more money into shares, thereby creating a valuation premium. We can also look at share valuations in the context of interest rates. The black line in the bottom half of this chart shows a yield on the Australian market minus a yield on cash-like investments. When the black line is on the rise, as is what is happening now, it is telling us that investors are increasingly getting more income by holding shares relative to cash. And this is the main reason why share prices are so high. In our own portfolios, we are underweight Australian shares. We think that valuations are too high to provide a margin of safety if interest rates or the global economy moves in the wrong direction from here. And that's something we can talk about in a future video update.